Everybody, this is Jim at SP500chart.com. It's about 4:20 on January 2nd, 2014. We started off the year with a little bit of ugliness. Let's take a look, see if this fits any broader pattern or if it's just the market showing us we need to take a little breather here. But before we take a look, I need to remind you, as always, that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Hey, starting out here on a 15-minute chart, just to remind you that we had a target of 1848 based upon the two dips that seemed like they wanted to make a third dip and get that inverted head and shoulders pattern. Didn't happen. But we still got our breakout over this line. And guys, even though it was a strangely shaped pattern, there it is. It works once again. We made that target on the final day of trading in 2013, which, to be honest with you, seems like a pretty good time for the markets to take a breather. Here's the deal. Chart readers talk about minimum targets because oftentimes that's the part that oftentimes you get the minimum target. That's it. We've seen that in some bottoms before, where we'll be tooling along and we make a top, and the top says we should at a minimum lose 3.5–4%, and we get the 3.5–4%. Then it turns around and starts to head back up. So that's why I said in the last video, there's nothing really that we can hang our hat on right now and say I'm expecting more, because the pattern itself had a minimum target, 1848, that got met. So today we started with essentially a gap down, kind of got held up, and it appeared, let me massage this line into the right place again. It appeared as if maybe we were going to kind of toy around back here around the apex of this pattern, then reverse back up. Not to be the case. So instead, this ended up being a very small consolidation, which we would mark roughly where the boundaries are about right here. Not exactly, because they just don't line up exactly. You get 3 points. There's no guarantee that they're going to line up, but there you have it. That essentially acted as a flag. And if you look at the degree of the downswing that led into that flag, it's very close to the degree of selling that took place after we broke down from this flag. So all that to say, it's possible we head back up tomorrow. But I got nothing other than a guess at that, to be frank. Maybe we needed to spend a little bit more time up around 1840. Perhaps this move came a little too soon up into 1848, and we may be paying the price for that now by dipping down into the high 1820s, at least momentarily. So as we look at where we ended up the day, I think we may look at this little area right here, and it looks sort of like the market wants to find a little bottom here, because this has our little inverted head and shoulders-ish look to it. If it is, this is roughly where our neckline would be. I'll make it purple because that's just the color I make necklines. And so if we get over this line tomorrow, and then we're able to also get above this both of these trend lines right here, then I think the S&P has a good chance at reversing back up and having a decent day tomorrow. On the other hand, if you want to be a bear, and I actually think this is a little bit of a stretch, but I'm going to offer it anyway. Maybe we are forming some kind of larger bear flag here, and we just don't know what the rest of it looks like yet. And so we can't really say, would it be here? Would it be here? We don't know. So just as we formed a bull flag for a few days here, and we didn't know what this pattern looked like until we were a good solid 2 days into it, maybe we're forming another and larger bear flag right here, and we don't know what it looks like yet. But I think we can throw this line up there at least preliminarily and say this looks like it may be a resistance line. So if that's the case, then failure to get over this and setting up a series of higher lows would then be finalizing the picture of a bear flag. Does that make sense? So in other words, this is an incomplete situation right now, unless we quickly get over this line in the morning on Friday the 3rd, and we start to rally up, in which case we would say we made a little bottom pattern here, which is what is in this oval. That's just one possibility. So guys, you know, there's nothing really on the chart at this point that tells us, well, we should expect, there's no reason really to expect support here necessarily, other than the fact that it looks like we may be making a little bottom pattern. I would rather expect support to be more like 1808, or possibly this line right here around 1812, 1813. So guys, I think that's all I can really say right now. We made the target, and it looks like the S&P is just telling us, you know, we made the target. Let's take a breather. Let's take a little time off and start the year off putting a scare into folks. Let me go back to there we go. So you see, there's our target. We made that target. Did not quite get up to that brown line where I would expect some resistance. And guys, we got room. If we can get up to this line, there's room for the S&P to get on up, I believe, to as high as 1880 before we would expect some serious stuff to happen, potentially due to some long-term trend lines. But like I said today, just some general weakness, giving up some of those gains, but it's easy to understand when you look at this chart, because it was just the middle of December when we were in the 1770, where were we exactly? We were actually under 1770 briefly on the 18th, and here we are just 2 weeks later, up nearly 80 points from that level at our highs, and now giving a little bit of that back. I don't think that's necessarily such a bad thing. So let's see where we find bottom, and let's see where we turn back up, as we usually do. There's typically something that tells us we are now ready to resume the trek upward. There's no reason to think we won't see something like that again. It just can't really be said in any kind of way that I could express reasonable certainty. So I'm going to just say I'm going to express reasonable uncertainty. Get over this line, I think we power back up. Failure to get over this line and maybe set up that bear wedge pattern, then breaking that bottom line would likely take us down into the lower 1800s. So there's your video for the first day of trading in 2014. I wish it had been better than this, but it is what it is. The chart is what it is. We try to call it as we see it. So guys, thanks for watching. Take care.